Good morning. So I thought we'd, excuse me, have a little bit of a live session to discuss let's start with the SPX trade, because I was feeling like maybe if people don't get it, this is something that I really want everybody to understand really well, because it can be an excellent bread and butter thing, given that the S&P options expire 3 times a week. But it can also be just an excellent way to learn how the pricing of options moves and shifts along with time, especially in a very, very short time frame. All right. So let's talk about SPX first. So what generally sets up everything we do is we know where resistance is, right? So we know that we have roughly this 44.25 area on this excuse me, on this channel. And so that's important. So we're kind of going against that. But what's more important is that if we look at SPY, I want you guys to look at just this chart here of the 15-minute. See where the candles kind of went and topped out below the prior day's high? And then look at how the QQQ went up and over, and it was just stronger the way it was moving. So I'm saying this to you, I'm pointing this out specifically because the scenario rather that you want for any ratio spread or unbalanced, what is the best scenario? Think about it. I'll ask you guys this. What is the best scenario of price action for a short-term 132, knowing that it's going to expire today? What's the best thing what type of price action are we looking for? Are we looking for creeping up? Or are we looking for hard drive to it, right? Yeah, exactly. Move up slow, right? So if you know what the components are trading for, right? If you know what this stuff is trading for, and you know that you have hours to go, hours instead of days, and you know you can get it for 50 cents, doesn't it make perfect sense that because the driver of the trade, mostly if the market goes sideways, the driver of the profit is going to be the loss of value in these shorts, right? Look at what we sold them for. They're trading for $1.90 at the time. That's untenable, so to speak. I don't know how else to put it. That's reality, but that's reality near the high of the day, which is when we put it on. And that's another thing I want you guys to understand is you want price to be moving towards the mid strike early on or at entry in order for you to be able to get this on. And you want that mid strike to be very rich. And $1.90 with hours to go is pretty rich. That's a good place for us to be. Okay? So that's what we're looking for. So let's just think about the different things that came into play here that set this up. We know we have a resistance point at the midpoint. And we know that the S&P is kind of stuck in a range. We know that the S&P had every opportunity to break out, but it didn't. We had 19 contracts at the high on the profile, And basically what I was seeing is it was trying to break out, but it couldn't. And the NQ was so much stronger. And I was thinking to myself, if the strong NQ can't pull the weaker ES, then the prognosis for the ES for the rest of the day is that it will be stuck in range. And if the ES is stuck in range, if I can buy something with a mid strike against a channel, then I know that over the course of the day, because my structure is 132, that will expand in my favor. It'll trade for 50 or 60 cents now, but it'll trade for $1.10, $1.20 in a couple hours. And as you can see, it's $1.25 right now. So it's doing that. So it makes perfect sense, right? Because think about it. If the market is going sideways, the 3 shorts have to be losing value faster than your 1 long, especially when your 1 long is close. I've said this before, and it's very important. You only want to do the 132 on duration that is very, very short. Okay? If you had bought a vertical targeting that area, you would immediately start to lose money as the market goes down. It doesn't make sense. You're not really targeting that area. It's really a credit collection vehicle. You can think of it that way. It's really a vehicle for collecting credit, with the kicker that if the market rallies to the mid strike, you may have a home run. But it's really a credit collection vehicle. Think of it that way. All right, this is important. All right, does anybody have any questions on this trade? And like I said, this is something you can, if you are confident of certain levels and you are confident about tempo and momentum or lack thereof, you can do this all the time on Monday, on Wednesday, on Friday. Okay, Matt, there is no assignment. SPX settles to cash. There's no such thing as assignment. Okay, VGT says, why favor this method over a condor? Condor is not the same thing at all. Condor is +1, -1, -1, +1. That will not really expand. Maybe an unbalanced condor where you have 2 short verticals, maybe that'll expand. A regular condor won't really work. All right. Black Shark says, if it rises faster, when do you exit? Well, there's no specific price point. You have to watch your spread. If it starts to get out of control and you see, okay, I paid 60 cents, now it's trading for 25, you get out. That's the beauty of trading short term, Black Shark, is that you can use your wits, keep your wits about you and get out. Right? It's not going to change that fast where it's going to hurt you. And remember, I'm putting it on in an environment where I'm pretty darn sure that the market is not just going to rip up to the mid strike. If we were in that kind of market where the market was doing that, I would never put on such a trade. Remember that we are starting with a more meandering type of slow market. Okay? No. Well, RB says, how about a vertical call credit spread for the same credit collection? No, that's also not the same thing either, because we're not saying it's not going to go there. We're saying it's going to go there slow. In a call vertical that you're selling for credit collection, you're saying it's not going there at all. You don't want it there. You're going to get tested, and you're probably going to get hurt. So that's not the same thing at all. Okay? Matt says, is there a max profit target? Well, yeah, the max profit target is $10, right? There is a mathematical max profit target because it would be the midpoint of the range, right? At the short strike, like any type of butterfly, it would have to be at this midpoint, correct? Where would it be most profitable? Here, because there's $10 worth of spread here that you would gain, okay? Matt C has an excellent question. Says, would you consider this setup on the put side if the market conditions dictated? Yes, absolutely. Absolutely. It can be the same. It can absolutely be the same. There's no reason not to look at it that way. You can look at it both ways. As a matter of fact, it will be easier to put on the put side because the skew of the puts being slightly more rich all the time will make it easier to put on, so to speak. So yes. That is correct. It can be done on the put side, yes. Okay. Does anybody else have any other questions? Yeah, Larry D, that's a very good way to put it. He said, I like this trade because it closes to cash and it's easy to peel off. So that's another thing that I forgot to mention is if you are somewhere in between the spread and now it's 3:55 p.m., you can roll the dice and just let it close. Remember, it closes to cash. So they will give you, they'll cash out your long vertical for whatever it's worth, $6. Right? So if you have one lot on left, you get $600 for that one, and your shorts will mark at zero, and that'll just go out at zero. So no, Jonathan, I didn't have it open in the pre-market. I didn't have it in the pre-market. I just saw it as the day was developing, and that just made sense. Okay. All right. Yeah, Mr. Dean, that does make sense as well. Mr. Dean says, I look at the 1-3-2 structure as basically a ratio, and really the two long calls are there to cap the margin. More or less. That's a smart way to look at it. That is a smart way to look at it. King Kai says, would you ever reverse it to a credit fly after it hit your target? I would not. Obviously, mathematically, there are situations where that could play out and work, but I would not do that. I would not. I don't think I would ever be short a 1-3-2. I don't know how that makes any sense because it just doesn't. It just doesn't make sense. I can't see myself, doing that. I don't think that would make a lot of sense. But you can see the expansion here where here's a really good point is this is basically where we started. Would you guys agree that this is where we started? In terms of time and price. This is where we started the trade. The market is really more or less back to where we started. We put it on somewhere in here. Correct? $10:08 a.m. It's in this bar up near the top. And look where the market is. The market is right where it was before. And yet, look at the price now. It's 3 times what the cost was then. So that's the power of the 1-3-2 in a sideways environment when the time is so short. Remember, we were getting $1.90 for these midpoints. Again, huge driver, and we paid $5 for these of it, and they've only collapsed down to 380. So there's a very, very big difference there. And we're not yet even at the long strike. So we'll just have to watch this closely. This will price out very well. It should price out very well at 44.15. Once that's right at the, maybe if we can get $2 for the other one, that would be pretty good. You can see I have an order working for 175 to see what happens. Okay. Lobster says, would this be even better in a high VIX environment? Absolutely. Absolutely. Because they're going to hold, that credit is going to be all the richer at that time. Absolutely. Tiddlywing says, do you typically put these on an inside day? I think it helps on an inside day. It helps. It could be. I think it would be helpful. Absolutely. Absolutely. And what'll be interesting here is, like now the market's pushing a little bit higher. NQs are softening a little bit. You just watch the price. Just watch the price very closely. And notice here, this is also very, very important. Like this one butterfly here is not doing much in terms of delta. This is like 6 and 3 is 9, 8.5. So this is only half. But look at this number. This is very, very important. The delta is now positive. Just think about that. The delta is now positive. What does that mean? That means as the market goes up, the spread, the value of what's in that SPX there goes up. Okay? Matt, I can't answer that right now. Again, you just watch it when it happens. This is the thing is that I find that most people are, and Dalton says this all the time. Some of you know this. Everybody wants absolutes. You want me to tell you if the SPX gets to this number, you should close it. If the market does this, the trade is going to lose. So you should close the trade before the trade starts to lose. That's what you want. You want absolutes. But that's not how the market works. The market, to understand and to have consistency and to whatever is just to practice for years and years, and then you understand all the gray. You don't think in black and white anymore because you see all the gray. I think, Matt, if price moved really hard up, it would probably hurt it. But again, that also matters what time of day it is. If price moves up hard at 3 p.m. and then the shorts are only worth 2 at that point, right? Because there's an hour left, then you're fine. If price moved down hard, it would also fall apart, right? Because you've got positive delta. Pete says, if price was to drop back down to 60 cents in the next couple hours, would it be worth a rinse repeat? I don't think so. I don't think so. It kind of depends where price is and what the long is still trading for. If the long is still trading for, north of $2, then maybe. You have to also be thinking of what am I going to be able to get out of the long if everything falls apart against me? Can I get my 55 cents back? That's another way to think about it. Okay. Larry, I would not consider rolling this into a similar trade tomorrow for Wednesday because it's too far away. And we also have a Fed meeting on Wednesday afternoon. And we've also got big tech earnings. We've got Google and Apple tomorrow and Tesla today. That's going to affect the NQ in a big way. And so we don't want to do anything so ahead of that. All right. Jossie, I'm not expecting anything on Tesla other than for the implied volatility to collapse somewhat tomorrow morning. And then depending on where the stock is tomorrow morning, we can decide if there's something to do for Friday's expiry. Okay. Christopher, the answer is yes. I would say yes. David in Boston, that's a good question. Would this be a trade to avoid on days where there is shock and awe as reported in the PPP? I think so. I think if there's shock and awe, you have more of a chance of a bigger move. I think so. I think so. Is the spread bid-ask not a bottleneck for the number of options? No, it's SPX. They're very thick. It's relatively easy to fill. It's not. Jonathan B, yes, we will be doing a Fed double back spread, not double ratio, double back spread. We will do a double back spread on Wednesday. Absolutely. VGT, it just doesn't feel worth it in SPY. It's just too cheap. And there's not that much margin here. So it shouldn't be that much of a problem. Remember, we're capping it off. We're capped off on the top. So that's that. All right. Do you guys want to move on to the Amazon VWAP now? Let's move on to the Amazon VWAP. Because this worked, but sort of not really, I think. And I was very tentative with Amazon today. Yes, double back spread is something we will do on SPX. It'll be a back spread on both sides. If you want to go look in the room drive and check out the, there should be something in there, right? Did we put that in there, Scoot? Weekly options, watch list. Yeah, it's the FOMC trade. It's the third thing. It's the third PDF in the room drive. All right. Okay. All right. Let's go to Amazon. So this was not a big day for me in Amazon, and I did do a little bit of the VWAP just for like, I don't know, 4 points, maybe about 4 points. But it was a tricky one. And I actually exited it first and then got back into it. But I want to show you how you should look at this. Oops, not VWAP, Amazon. What am I saying? Let's turn it back on. Okay, and notice that I don't do the envelopes. I keep just the I go with just this. I don't do the envelopes. So on my VWAP, this doesn't come down as low perfectly. I have it on another charting package, but when I saw this on this move here, okay, I had a limit order here. But my limit order was not filled because, like I said, on my other charting package on eSignal, they had the VWAP lower. It was like this. So I had an order, but it didn't get filled. So then when the price bounced to here at the end of that candle, I canceled that order. Do you guys understand why? Because it already touched, so it shouldn't fall back down. And then when it did fall back down, the only reason I got in is because it held it. So what you want to do with these trades is you want to be watching the tape and the chart. Preferably you can have it next to each other like on Thinkorswim. You watch the tape and the chart together at the same time, and you just be very, very careful. And if it holds it, then you can take a small trade maybe. But in general, this sort of situation is usually a recipe to get out or not take it, meaning you come down to it, you don't get filled, or even if you do get filled, you get a bounce and you fall back to it. You generally don't want to buy the second test. Now, obviously, today that would have worked, but this is an odds game. Don't pay attention today. I'm talking about what will happen 99% of the time. You will lose on that trade. If it bounces a little and then retests very quickly within the next 5 minutes, it usually means it's going to break and you can actually short the VWAP. Again, I see that didn't happen today, but it's not, it's usually not how it happens. So I'm saying just be aware of that. So that's how you want to look at that thing. Now, what makes the Amazon VWAP trade a buy? Remember, a couple of things. We have all the parameters. Increase in volume, check, and new 2-day high. Those are the two main things. Did it make it? So you don't want to be trading this on any sort of inside day. Like this day, notice that the VWAP trade is not there because you did not make a new 2-day high. You did not make a new 2-day low. And notice that it's not even respecting the VWAP. It's got distribution on this side and it's got distribution on that side. That's how it happens on an inside day. On an inside day, you don't mess with it. You buy the pullbacks to it on a day that it's above, or you short the pullbacks up to it on a day that it's below when you have a clean 2-day range, okay? King Kai, this is done with stock. This is not done with options. This is a day trading play with stock, okay? I don't have any target in Amazon Moreno because I'm not in it. So I'm not really, I don't know what it's doing right now. Obviously, it just broke this trend line. So is there a chance it goes to the high? Maybe. All right, let's take a quick look at what is our SPX trading now with SPX at 44.16. Aha, so we're $1 in the money. And look, we're climbing a little bit. So that's okay. So we just watch. There's nothing to do. We just watch. Just keep our eye on it. If the spread starts to collapse, and notice here, this is important. Look what happened here. Aha. Very noteworthy. Did you see how before our delta was plus 10? Now it's negative. We don't want negative. We want positive. And look, contraction. So we just watch. We just watch carefully. If it starts to really fall apart, the spread falls down to $1.90, exit. That's fine because you don't want the market close to the mid strike too early. Okay? So I hope that helps. That I'm giving you guys a lot of different tips on how you can look at these two different things. All right? Does anybody have any questions just on the Amazon VWAP? I want to see something here. 415. So about $4 of extrinsic value at the money. So that means we would be losing if the market went to the mid strike right now, because 3 times $4 is 12 and we only have 10. So we would be losing on the trade if we went to the mid strike. And you can see, look at how it's starting to collapse. So maybe we have to be out. Let's try $1.10. Maybe we can get a double, because we don't want the market to really just shoot up there. There, okay, we got $1.10. So officially, we'll put it out at $1.10. All right, so that closes that. Now I've got a bunch more. So we'll just see what it will. I'll still put them out. Just so I could watch the price. I like to have orders out here just so I can watch how the price acts. All right. No, Ping, it's not passing the VWAP. It's just a new 2-day high, meaning that price at some point during the day went higher than yesterday's high. That's it. Jonathan B, no, I don't do anything like that. Just keep it simple. I'm not interested in any EMA cross or above, below, whatever. None of that. VGT says, shouldn't we be keeping our eye on the market profile, see what kind of prints are taking place at the top? Yeah, we can. I mean, it's 266 contracts. Remember, what we are guarding against in closing out the spread, right? And remember, it's a double. Now, I don't have this on all that big right now. I did what it was, 5 or whatever, 6, I think. But there's plenty of times where I'll put this on like 25 to 50. So it's worth it. It's absolutely worth it. Think about it. You're making 50 cents on one. Maybe it climbs higher. Maybe you make 75 cents, $1. It's totally worth it. But what you want to be careful of is, remember, when your delta gets negative, market can do whatever it wants. You don't want some sort of a blow off top, like shooting the market up to your mid strike early in the day, and then now it's costing you money to take off. So remember, it's kind of a dance. You want to be careful. You want to be very careful, because it is, you know, it's you know, there's obviously danger there. So you want to be as careful as possible. All right. King Kai, the VWAP trade is not specific to Amazon at all. It works on all stocks. As a matter of fact, that's the scanner that I'm working on, and it will give you stocks all day long that you've never heard of that have this setup, that have the 2-day high, pulling back, whatever. So, you know, I generally don't do the VWAP trade on ES or on, I don't do it on ES, and I don't do it on NQ or SPY or QQQ. I just do it on individual stocks. And I generally only day trade Fangman plus T. So that's it. All right. Matt, we're selling to close. We bought to open on these. Okay. Coin, I'm not looking at anything. I just have a tiny position here. As you can see, it's very tiny. I have this put thing, didn't do anything, just lost money. There was a put structure, and I'm long 50 shares. So it's nothing. This was a position all the way from back here, and the goal was to build it, but it never did anything. So I never built it. And I tried to day trade it long today, just very small with like 100 shares. And I think I lost 50 bucks. It didn't do anything. Just kind of fell back. So I'm not doing anything with coin. All right. As far as BTC is concerned, it looks great. 38.4, holding very well here. I'd be interested in getting back into some futures trading action on the BTC above the trend line. So we'll see. All right. Jonathan, yes, you need a new 2-day low for a VWAP short entry. Okay. Cayman, you can probably check that out on Google. There's probably tons of stuff out there, but I would advise people to keep it simple. And I've literally just told you the whole strategy. There isn't anything more to it. What's more to it after that is you have to know and understand momentum and tempo and market internals and when a long day trade is a long day trade. That's really the big secret. Like, I've only told you the mechanics. I'm just telling you the mechanics of the trade. The rest is the hard part. Basically, when to do it, when not to do it. That's the hard part of all day trading, right? That's why I say this over and over, like, to teach day trading out of a book is ludicrous. Even to teach it in a course, to me, is I'm not even sure of the value of that. I mean, it has value, but all you can teach somebody are the setups. But that means nothing when you have a loaded gun pointed at your head. Nothing. It's like, yeah, okay, buy it on this pattern, but things are moving fast. You've got a lot of money on the line. The moment you get in, it ticks down 25 cents. You're down. It's day trading. I mean, it's a feel. It's an art. You can't, there are no absolutes. There's not, okay, this, Peter says it's a new 2-day high and it's pulling into VWAP. I'm going to buy it. If it was that easy, it would just be automated. So, all right. Okay. That is it. Hopefully that was useful, and I will be around all day.